Welcome back to the Lone Ranger Radio Show. My name is Bruce Woodburn, and I am the Lone Ranger. Today, we've been talking about how we can help more first-time home buyers in this environment where rents are going up faster than mortgages, and houses are going up so fast that they're becoming out of reach for the first-time home buyers. So I brought one of my specialists, Mr. Chase Woodburn, on board with us to share the journey that he went on when he bought his first home last year, the experiences that he had. We talked a little bit about the opportunities for first-time home buyers and the programs that exist for them. 3% conventional, 100% USDA, 3.5% down payment for FHA with marginal credit scores, how to use border income, how to get a mortgage for 3% down and a reduced interest rate and low PMI, all those things we talked about in the last segment. If you have questions and you'd like to talk to Chase, one of my loan officers, or myself, or if you have adult children that are renters right now, get them out of renting and get them into home ownership. If you're going to help your kids, help them become a homeowner. It's the best gift you could ever give them. You're going to leave them your money anyway. Leave them some money now so they can buy a home. Come on. Don't tell my kids I said that. But I mean, be honest. Like you'll co-sign for a car. You'll co-sign for a student loan. They'll have $80,000 in student loans and they'll make $45,000 a year. That's ridiculous. Where you could help them out with 10, 15, 20 grand for a down payment on a house, and they'll turn around, they'll make $20,000 in their first year, if not more, in equity. It's the best gift you could ever give them. Let's stop the renting and start the home ownership. All right, along with me, I've got Chase Woodburn, one of my loan officers, been on my in the business, watching mom and dad do mortgages for a number of years, but got licensed when he got out of college at UCF last year, bought his first home on his own. He shared with us the journey that he went through in using border income and researching all the different types of financing that were available to him. And if you have questions for him, you can call him directly at the office at 407-869-8830. His extension is 132, or call my number and I'll connect you with him at 407-706-3313, 407-706-3313, or WeBringYouHome.com. Chase, thanks for joining me today on the show. I really appreciate that.
Thanks for having me.
You're welcome. So I love the fact that you did all your own research to discover what programs were available for you when you bought your home. Right. Now, for all the folks that are out there listening to us, because I've got people listening out there that may be renters right now.
Right.
Maybe they've never owned a home. Maybe they don't think home ownership is ever in their future. Okay. But let's dispel a few myths. First of all, if you had a 600 credit score, can you still buy a home as a first-time home buyer?
Yes.
Okay. What kind of loan program would you do for that?
You're going to want to go FHA.
Okay. Now, when it comes to what if you had a 590 credit score? Is that possible?
That's still possible.
It's still possible. Absolutely. Now, if you had a 750 credit score and you had a high debt ratio, 50%, what kind of direction might you lead into there?
That's a great question, actually. As we know, FHA is slightly more lenient when it comes to your debt to income ratios.
Yes.
Than conventional.
Right.
However, when you go FHA, you have some fixed costs associated with the loan that may make it more expensive than going with a more favorable conventional program.
So if you had a high score, but a slightly high debt ratio, it still might work conventional.
That is a situation where you would want to run the numbers both and see which one comes out on top.
Yep. So you wouldn't guess when a client calls you, you'd say, let's put the numbers together. Let's get your income verified. Let's pull your credit. Let's look at your debt ratio. Where's the cash to close coming from? How much cash to close do you have? Then you structure the loan to meet the client's needs.
Exactly. And as we talked about earlier, a $245,000 house, your Fannie Mae Home Ready is $50 to $75 cheaper a month than your standard 3% down conventional.
Right. So for the same program,
it's $75 cheaper. And conventional, if you have the credit score and the means to do it, is generally cheaper monthly than FHA because your FHA has a fixed mortgage insurance.
That's correct. So you have PMI upfront and monthly on both loans, but it's higher on an FHA loan than it is a first-time home buyer, home ready, Fannie Mae, which is conventional loan.
Correct. So in some cases, if you're, like we said, on the fringe there, or you're really close on your debt to income ratio, maybe doing a first-time home buyer program like Home Ready will eke out enough savings to keep you below the 50 debt to income ratio that you need to be at.
That's okay. So we've now got opportunities for folks that may have good credit and qualify for a first-time home buyer program like Home Ready. Now, Freddie Mac has got another one too.
Freddie Mac has an awesome program.
Yep.
And with Freddie Mac, you get to take advantage. A lot of young people have student loans.
Right.
Freddie Mac allows you to take 0.5% for student loans as opposed to the full 1% that Fannie Mae takes.
Well, Fannie Mae changed that, though. Now, they just changed that guideline this month. So they're now allowing you to use the 0.5% rather than 1% on that right now. And on Fannie Mae, and you can use, if you're in an IBR, an income-based repayment program, you can use that payment as well.
Right.
But on FHA was 1%. They went to a 0.5% as well. So, excuse me, I got that. FHA went to a 0.5%.
Correct.
Fannie Mae did not.
Yes.
Freddie Mac did. My apologies. I got my Fannies, Freddies, and Ginnies mixed up there. So, conventional Fannie Mae still 1%. Freddie Mac 0.5%.
FHA 0.5%.
FHA just went from 1% to 0.5%.
Correct.
So all of these things, it sounds confusing for us. It's definitely going to be confusing for you. We'll sort that out for you. Make sure we guide you in the right direction so that you've got all the information and are able to qualify for the best program that meets your needs. So what other obstacles are you seeing with young buyers right now trying to enter into the market?
The big thing right now that I've noticed is cash to close for a lot of people, right?
Okay.
So, in one thing, I had a client recently that I helped out with this. The rates for the Home Ready, Home Possible are actually so good that right now they are some of the few programs you can get a rate rebate. So
really?
I had
What does that mean?
A rate rebate where you are likely familiar with a rate buy down,
right?
Where you pay the investor money and you
get a lower
rate. A rebate is the opposite, where the investor, being Fannie Mae, Freddie Mac, Ginnie Mae, will actually reimburse you for getting a higher rate.
Okay, so in other words, if the rate was 3.125, you could go to 3.5 and maybe get the client $1,000 toward the closing costs.
Exactly. I had a client that was short about $2,000 cash to close, and we were able to bump them from a 3 1/8 to a 3.625.
Right.
And they were able to close.
So they closed. They wouldn't have closed because they didn't have the money.
Correct. And they couldn't do that FHA. They couldn't even do it normal conventional. It had to be the Home Ready program.
Well, I'm going to tell you something. That takes a lot of research, and it takes somebody, a professional. You're not going to get one of these online rocket companies to do that. They're not going to do that. Now, if you got an 800 credit score and you're putting 20% down and you're just literally a cakewalk dream boat, then maybe those loan officers can help you. But most people have some challenges. Okay. They don't think they do, but they may be self-employed. Okay. They may be 1099. They may have some credit challenges, some debt ratio, and it takes somebody that can really navigate which loan program is going to meet your needs best and guide you in the direction so you can get the best rate.
Correct.
Right? So because sometimes we will counsel a client and go, you know what, you got a 680 score, but you know your rate would be a quarter point better if I could get you to 710. And you do a credit analyzer, boost the credit. Now that sometimes takes money for them to pay down a credit card or pay off a debt. By the way, if you're listening to this, never ever do your own credit repair. You will do more damage than you will do good. Believe me, I got a client right now that thought that by paying off all of her debt, her scores would go up, and they went down. And she was like, I don't understand this. And I'm like, I told you, let me run an analyzer, and then we'll get the best results for it. So don't do it on your own. Hire a professional. You're not going to pull your own tooth out on your own, and you're not going to remove your liver. You're going to go to a surgeon for that kind of stuff. Come to a surgeon. We're mortgage surgeons, aren't we?
We are.
We're mortgage surgeons. That's what we do. That's my new title, not the loan arranger, the mortgage surgeon. There we go. So if you have questions, you can call me at 407-706-3313. That's 407-706-3313, or go to webringyouhome.com, where you're getting all the information you need to become a homeowner or to refinance. So doing tons of refinances. If you're paying the rate in the 4s, give me a call. Good Lord. You're paying a rate, I can get you down in your payment. Now, here's what I love. I love helping people go from a 30-year to a 15-year, because now you're going to be debt-free when you retire. Completely debt-free. Let me show you how to do that. No cash out, refi, 15-year, beautiful loan, still in the 2s. So you can get a great rate. Back to the low down payment, first-time home buyer. Your biggest challenges are cash to close.
Correct.
Getting money. Now, can you borrow from a 401k?
You can.
You can. Can you withdraw from a 401k?
You certainly can.
Can you get a gift money from grandma and grandpa?
You can get a gift member from immediate family.
From any immediate family member?
Correct.
Okay. Now, do they have to sign any documents?
They need to sign a gift letter.
So the gift letter, do they just draw up a gift letter on a napkin, or do you give it to them?
We have a gift letter template that we will provide you with all the information. You just put in the bank account information and sign the date.
Okay, so the borrower signs it and the donor signs it.
Correct.
Now, on a conventional loan, does the donor need to provide any of their documentation?
They do not.
They don't need to provide anything. On an FHA loan, what does the donor have to provide?
The donor will need to provide bank statements to evidence that they have sufficient funds to gift.
Right. So they've got to give a copy of their unredacted bank statement for 1 month to prove the transfer of the money and that they had adequate funds.
Correct.
Pretty darn simple.
Dead simple.
Right. Now, believe it or not, though, Chase, I've had issues with donors in the past that don't want to provide that information. But if the buyer is going FHA, it's a requirement. They have to provide it. There's no way around it. If it's conventional, they may not. But we're not diving into this to the donor's information. We're just getting a copy of their bank statement. That's it. They don't have to sign anything other than the gift letter.
Right.
Okay. Other challenges other than cash to close, I think, can be debt ratio.
Exactly.
And one of the big factors are student loans.
Exactly.
Student loans can be a real issue, but we got a gift from Ginnie Mae, which is HUD, which is FHA loans, and they lowered the requirement from 1% of the student loan as a payment. So in other words, if you owe $50,000 in student loans, you have a $500 payment.
Right. That
just dropped to $250. That was a huge gift.
Yeah, that was amazing.
So that's a real benefit as well. Other challenges may be just improving your credit,
right,
or not having enough credit.
A lot of young people don't have credit.
I recommend that your utilities go on your credit. You can have your utility company report that, and you must have at least 2 credit cards and keep them at extremely low balances. Don't charge them to the max and then pay them off and go, oh, I always pay them 0 at the end of the month and wonder why you have a 590 credit score. It's because when the credit bureaus are reading it, you're at the max. Keep them under 30% all the time. If you have questions for me, if you have questions for Chase Woodburn, one of my finest loan officers, and my son, and I'm so proud of him. He's done so well in this business. And I'm telling you, you won't find somebody that'll work better with you. He really cares about you guys a lot. You just call 407-706-3313. That's 407-706-3313, or go to my website at webringyouhome.com. I'll be back in 5 minutes with more of the Lone Ranger radio show and how we can help teachers, law enforcement, and first responders.